Hello, South Bay. It's April already. The first quarter of 2023 is behind us. The real estate market has and is changing, sometimes daily. Let's first look at the numbers, then stick around to the end and find out what we think is happening going forward and how you can take advantage of the current market. Let's take a look back at March since that's our most complete data. Median estimated home values around the South Bay range from $613,000 in Wilmington to a little under $4 million in Rolling Hills. We see a little more red on the map this month as values in some areas are down from a year ago. But that's expected. Remember, we are getting closer to comparing today's values with the absolute peak of the market, which happened last June. So we'll see most of this turn red as we get closer to that, comparing the peak to now, and then expect that most of these cities will gradually turn green because we're still seeing price growth in most areas, but at a very slow pace. If you want to know what your home is worth right now, contact me and I'll send you a free report. Just to give an idea of the range of homes that sold in March, they range from this one bedroom, one bath, 742 square foot condo that sold for $285,000 to this 5 bedroom, 6 bath, 7,655 square foot home with an ocean and city lights view on almost 5.5 acres that sold for $12,480,000. Hello everyone, Steve Huhta here from HousesInSouthBay.com, bringing you the South Bay Real Estate Market Report for April 2023. Please remember to like, subscribe, comment, and especially share if you find this of value. Now, we all know what affects changing prices most is supply and demand. So let's take a quick look and see what's going on. On the supply side, we had 586 active listings in March in the whole of the South Bay area. Of these 586 homes in inventory, 318 are new listings on the market in March, which is down 43% from a year ago. Let's look at the demand side. We only had 307 homes sell in March. We also had another 292 homes pending, which means they've signed contracts, but the sale process not completed yet, so those numbers will be in future months. We can see that we have a fairly tight market. Now, the average days on market is 35, with half of those homes selling in less than 15 days. That seems like a lot because we've been used to such fast sales during the pandemic, but as you can see, it's just getting back into pre-pandemic normal range. One very important number and a way to visualize that balance between supply and demand is best shown in our inventory months of supply, which is at about 1.9 months of supply right now. So if no new homes came on the market, we'd still out of homes in about 8 weeks. This is the number that gives us an indication of where the market's going. So even when the numbers are a little crazy, we can look at this and see how things balance out. Now, with only 2 months of supply, we're still in an upward market long term, but that doesn't mean that we won't have some decreases in prices in the short term. The huge gains in home prices during the pandemic was not normal or sustainable and has to correct at some point to a more normal market. If months of supply reach 4 to 5 months locally, or about 6 months on a national level, that's when we'll see a more downward market and things are going to start softening. There is no crystal ball, but we see no indicators that home prices will soften much further unless something drastic in the economy changes. We just don't have enough homes to meet demand under current conditions. I mentioned at the beginning about taking advantage of the current market. Well, for sellers, demand for correctly priced homes is still high. This doesn't mean discounting your homes, but do not overprice it against similar homes on the market. Pricing your home correctly will get maximum buyer competition. Also remember that in this market, preparing your home for sale makes a big difference for the sale price and how much money you put in your pocket after closing. Now that can range from simple decluttering and cleaning to doing some deferred maintenance, simple repairs, or even some renovations. You also need an active and aggressive agent like myself to market your property to the most potential buyers. If you're looking to maximize the value of your home, reach out so we can put together a plan that's right for you. And for you buyers, it's actually a pretty good time to buy. Yes, higher interest rates and a still confused economy have held prices lower than you would expect with such low inventory. You can take advantage of that. Because remember, you're not buying an interest rate, you're buying a home. If interest rates continue to climb, you will have saved money by acting now. And if interest rates fall, you can refinance to that lower rate. In fact, some of the lenders I'm working with right now will refinance your loan for free for the next several years if rates go down. If you plan to live in that home for a while, long term, you shouldn't get caught up on current interest rates, but more so on what fits your family's budget and needs. Even better for buyers, buying a home is a quality of life purchase, benefiting you and your family in many ways besides what it costs every month. Yes, it costs more right now to buy, but once that cost is locked in, it'll stay the same forever. Unlike rent, which historically keeps going up here in Southern California. My final thoughts are that rising inflation is actually a reason to buy. A home purchase shields and stabilizes your largest monthly cost, your housing cost, against inflation. Rents will continue to rise with inflation, whereas your home mortgage will remain the same and build equity over time. History also shows us that once inflation is under control, we will probably see lower interest, giving you a chance to lower your payments in the future. But don't wait until then, because when interest rates go back down, prices will start going back up. Now, no matter the state of the economy, you still need a place to live and build memories with your loved ones. Would you rather be doing that while paying off your home or paying off your landlord's home? Ask yourself, what real estate opportunities would you like to take advantage of this year? And send me your questions about buying, selling, or investing in real estate so I can help. Bye for now.